Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody guys. Today we again will take a look at the euro currency because in the short-term charts situation on the euro currency is changing, and mostly our long-term analysis suggests the further downward continuation on the euro currency. This comes just from the different mismatching and the disproportionals between the Fed financial policy and the European Central Bank financial policy, different situation in the economies. And today, guys, we also put interesting research from the Phantom Consulting concerning the mismatching of the public opinion. Right now, we mostly could see in the mass media on the perspective of the United States economy is that the inflation is too low, the United States dollar rate is too high, and that's negative for the economy, and this really could bring the significant problems. But in reality, the Phantom Consulting tells that it's not quite stands in this manner how it imagined by the public based on the public opinion. So it's very interesting. And although in general they confirmed that in the long-term perspective it will be probably negative pressure on the euro, and the market probably will continue to move down, but in the short-term perspective some minor bounces are not excluded. So previously we said that hardly any significant upside retracement could happen. I mean in an area of 120, 121 area, as we initially discussed on the monthly chart. The current situation tells that hardly this will happen anytime soon. But at the same time, guys, in the short-term perspective, the minor upward retracement in an area of 112, 113, it's really possible, and the long-term analysis doesn't exclude this possibility totally. Besides, right now on the shorter-term charts, we see some signs that this upper bounce really could happen. It's very difficult right now to forecast the possible final target, final destination, but if we will go through it step by step, it's really we could get the answer as market will approach to the following target. And right now we will start from the daily chart and the nearest target. So guys, we suggest you to read our weekly research because there we are trying to understand and investigate the reasons and different market signs that confirm possible upward bounce, especially on the weekly chart where we are trying to understand the market mechanics, what really is going on, and why we see the bullish signs here. On the daily chart is just mostly the continuation of the weekly, so if you will watch the video and read the analysis, you just bring you the total picture to see. So right now on the daily chart, what we have, take a look at market on this action has formed a lot of bearish patterns. It has started from the reversal candle when we have taken the short position for the first time. Later, when the market has formed multiple bearish grabbers here, we have taken it for the short time, and their drop finally has happened. The market has followed below this support area, but then and has reached major 618 support. Then occasionally, market has accelerated right back inside of it, and we said, guys, this is probably the Jordan Apple directional pattern, and it could trigger upward action. That has happened. And here we have stopped our attempt for taking the short positions, because here we didn't know what really could fall. This taking the position against the rally, it's very dangerous. Then we've got this bearish grabber, and we said, well, pattern has been formed. Maybe we could try to continue move lower, but market right now, take a look, stubbornly challenge this 109 area again and again. And right now, take a look at this spike up. It has erased this bearish grabber. Also, take a look, the trend has shifted bearish, and this grabber also has been erased. Initially, market has failed to pass through it, but on Friday, this finally has happened. This stubborn activity that they're trying to pass through this area points that market probably has more chances to continue move higher rather than drop lower. From that standpoint, our situation is very simple, because 107 is the key to the long-term context, to the long-term sentiment. And this is also invalidation point for multiple patterns. So that is the invalidation point for the weekly bullish grabber. That is invalidation point for our A, B, C bottom, D pattern. It's also got this triple to buy, as you can see. That is also invalidation point for the 4-hour time frame chart butterfly pattern that's forming right here. We'll see it a bit later. So this is the key to the long-term context. As soon as market will drop below it, we will return back to discussion of possible taking the short position. Until this will happen, following by the letter to the technical analysis, we in general should not take the short position. Well, but what about the upside target? Well, the first target will be right here. This is the 618 extension of Gartner's triple to buy pattern in our A, B, C, bottom, D pattern. This is nearest target. It's 110.60 area. That's the first target that market could reach. So here it's probably all clear that we have here on the daily chart. What we have on the 4-hour time frame chart. In the short-term perspective, what we will be watching for next week, situation looks approximately as following. So what we have the parallel channel, and last week we started to discuss the possible upper breakout of this channel. Okay. The target of the patterns that are forming here are the same as on the daily chart. Take a look. The 127 extension of the butterfly stands approximately at 110.60. It's very close to the top. Inner ABCD pattern also has the target in the same area. You guys here could recognize, for example, a reverse head and shoulders pattern. So you can see the left shoulder, head, right shoulder. But this will not change the overall situation, because as you can see, the target is based on this ABCD pattern. And whether you will treat it as just ABCD or as head and shoulders, it's nothing will change from this. Market, take a look, trying to pass through it, trying to break this area. It already has broken out of this channel. As you can see, this border has been broken. Market now is standing in a retesting of this border. But it hasn't quite broken this resistance. So you can see this top 110 area. First one, so now again 110, again 110. Here is again 110 and again 110. So this is very important area. But first, we need to watch how market will respond on touching of this level, because this will be even more important. Take a look. This will be the weekly pivot point and broken border of this flag. So for bullish market, it should not return back inside of this. It should not drop below this trend line, because it will put under question the possible upward continuation. And returning back in the consolidation that already has been broken is always negative sign. As you can see, the action on the euro currency recently is very choppy and nervous. That's why this will be very significant. If you will take a look at the hourly chart, you will see also that this is confidence support. The market has completed minor pattern. As you can see, BCD now stands on retracement down. And that will be also 108.70 area, confidence support. It's very close to the weekly pivot. And that tells us that to keep chances on upward continuation, market should hold above 108.70 area. So somewhere in an area of this trend line, 108.70, confluence, and weekly pivot point. That will be major support area for the euro currency in the short-term perspective. If this will happen and market will hold there, then we could count on the possible upward continuation to the 110.60 area approximately, with the big barrier at 110 even. So that will be very significant resistance on the way up. But taking into consideration how often market has challenged it already, it will become weaker, and the market will keep the chance on the further upward continuation. So that's our short-term view on the euro currency and the levels and patterns that we will be watching for next week.